Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar continues its bullish climb as the trend still remains relatively firm and now getting slightly steeper after the market claims the 72-cent handle but remains contained by the top side resistance of 72.35. Having reached a fresh 3-month high, traders are increasingly favouring the currency higher due to the expectation of another rate hike in September. However, with rates likely to stay higher for longer, importantly, the move has now come despite a firmer US dollar, highlighting the Aussie dollar's strength. With the domestic repricing now reflected in the currency, attention shifts whether the Aussie can hold to the challenge of 72.35 as Fed Chair Kevin Walsh takes the stage at Jackson Hole later today. Keep an eye on the technicals. There is divergence on the RSI. I still feel as long as we don't break above 72.35 or pull back somewhere close towards this trend line, which is seen around 71.75 or lower to around 71.30, allowing a little bit of slippage. But keeping an eye on this RSI with the bearish divergence slightly intact could see the market move lower. Euro still continues to weigh on the support as it now backs away further of 117 figure 20 and looks maybe now to the challenge of 115.70.75 and reassess from there just in case we get a correction back to 117. Technically though, the market is heavy, so the move to the downside is favoured first. Dollar yen, well, we can see now into the 5th consecutive day it's still trying to climb higher and still rather stubborn in terms of the fact it knows it will take a heavy slide like it did just here back last few days ago, and no doubt we will see another pattern like this emerging. Overall though, I still feel the bears are waiting, so I'm not turning the view fully to a bullish case as of yet. Sterling weaker, and also some of the sterling crosses, and keep an eye on sterling yen as that might even go low as well. With the market looking now towards 135.45 or down to 134.65, technically we are heavy. Wrapping up with commodities, as you can see, we're looking for a little bit of a weaker play over the last 48 hours. But overall, though, we could still see this market bounce. And if so, from 4,550, if we see that low, back towards 4,700, which is where it was trading on Tuesday. Turning to oil, the market has rebounded, but technically still a little bit heavy. I still maybe feel there is a little bit more downside to play, and that is towards 78, 80, 90 to $79 a barrel, and then expect the bounce back to 85 potentially. But I still hold a neutral stance, even though technically that's what I'm feeling, that market may move that way and then reassess. Well, that's about it. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.